So you're right. Monetary policy has been called a blunt instrument. Now I call it an unfair instrument.
Yeah.
And good financial policy or fiscal policy, which has always been designed to work hand in hand with monetary policy.
Ideally, it should be, yes.
That's how it should work.
Too right.
So what would you suggest fiscal policy should be looking at today?
Fiscal policy in the budget, they need,
outside, let's say outside the budget.
It's got to be.
What about some tax breaks?
Well, there's got to be a combination of different things. Well, I think the first one, and I'll say it's the easier one, is cut government spending. Just cut it, We've had, you mentioned Paul Keating before. I remember the 86 or 87 budget. Can't remember which year. When he was Treasurer, Banana Republic. Australia was heading for a Banana Republic.
His words again.
Check your economic history, everybody.
Yeah.
Mid-1980s.
He called us the Banana Republic.
And he had, against, this is a Labor government, Labor Treasurer.
Bob Hawke was the Prime Minister.
Yep, and he had 3 years in a row. I look back at the budget papers now in awe at that period, because in the back of the budget papers, sorry to be boring, there's this table that goes from 1970 to 2030 in terms of budget numbers. There are 3 years in a row, the only 3 years in that, 60 years of Australian economic budget history, there were cuts in real government spending in 3 consecutive years. No other government's done it. Costello didn't do it. Swan didn't do it. John Howard, when he was Treasurer back in the 70s, didn't do it. No one's done it, except for Paul Keating. And that was the response to a high inflation rate. Back in the 80s, inflation was 7, 8, 9%. So it was shocking. It was a real problem. And Australia was getting smashed from, really weak commodity prices and these sort of things. So Keating, to his wisdom, just said, I'll paraphrase, probably not actually, stuff it. I've just got to put the budget in a position where we run budget surpluses. We're going to cut a whole lot of programs. I'm sorry, some tough love. Like tough love to your kids, love your kids desperately, but sometimes, mate, you can't have that extra.
It's not on.
That extra paddle pop. You've already had 3 of them, whatever the case with paddle pops. But maybe that's not the right example. But, so Keating was saying some tough love for the economy, and it worked. It worked because that was that led into that.
The recession
we had to have. It led into inflation because Australia had had 20 years of inflation, 7, 8, 9, 10, 15% sometimes. My God, 15% inflation. From 91 through to the pandemic, we had inflation between 2 and 3% consistently.
On average.
They hit the target for basically 30 years.
We were the envy of the world.
It was fantastic.
Yeah. And we had...
And I think that had a lot to do with that cuts in real government spending. The size of government shrunk. We had budget surpluses and all the rest of it. Fantastic. Now, to do that today is possible. We saw it with the NDIS, that announcement. Let's assume that they deliver. Let's assume that they deliver those. Instead of 10% growth in disability funding, it's down to 2% out to 2030 or whatever it is, whatever. That's a pretty substantial cut. If they can do similar, maybe not quite as big a magnitude, but even half that way on spending on things that are just too expensive, that are putting too much cash into it. When I mention these things, people say, you can't cut defence. Well, maybe you can. Or trim it. I'm not saying we don't have it zero. We need defence. It's a really important part of our economy. Or healthcare, Medicare. What's on the pharmaceutical benefits scheme? That's expensive. Now, we need cheap medicines for people who are sick. Of course we do. We need Medicare, people to access Medicare when they're crook. Of course. But can we think of a way, and they're the big ticket items in any budget.
The care economy.
Yep, and I hate this, and I'm just canvassing this. It's not necessarily. I'd have to think about this.
No, but the care economy has become a huge part.
Huge part of that government. The budget numbers that come out next week, a week after next, on the 12th of May, they'll have government spending per year of about $750 billion. So if you can trim 2%, you're saving $15 billion a year. So just cut a couple of percent off some of these programs. Maybe, again, so when I say health and education and aged care and all these things, I'm not a mean sort of savage bastard, I'm talking about perhaps just unwinding some of the very generous conditions that we have with them. And it even mentioned it could be temporary. We just need to get this inflation rate down. We need to be tough. Reserve Bank does its bit. We're doing our bit in the government sector, in the budget sector. Yep, we're going to have a really crappy 2026 as a result of that. But hopefully by 2027, maybe a little bit longer, it takes a while for these things to work, inflation comes down, there might be some resolution to the oil shock in the global economy might be a little bit better. Then all of a sudden we'll sort of think, oh, thank God we've taken our medicine. We're in the recovery room and we're starting to look a little bit better. I'm confident that sort of advice is coming from some people. It's just a matter, and it's not just Jim Chalmers,
it's political will,
it's the whole cabinet say, yes, mate, we're going to cut.
Yeah, because Jim can't just cut.
No, he's got to get all the cabinet.
He's got to go to every minister.
Yeah.
So
the finance minister.
I'm going to cut into your.
I'm going to cut your pet project.
Yeah, you can't spend that money anymore. All of a sudden,
I'm going to cut 2% off it.
And that particular minister will say, wait a minute, like
instead of $1 billion, I'm only going to give you 980 million.
And that person will say, well, hang on, that's going to affect my constituency, or that's going to affect my chance of re-election, or whatever the case may be. Yeah. And it's a really tough one. And we do have a big care economy in this country, and it's great.
Yeah, the question is, can we expensive?
Can we afford it? That's my issue. Like, we're not 50 million people where we're getting taxed from 50 million people.
And the other thing too, this is the other thing that will get me into trouble with everybody. So I've probably offended everybody on this podcast, Mark. Hike taxes. Now, I say that with a huge degree of caution. And we've had this conversation before about the GST, lifting it, broadening the base, using the revenue partly to take money out of the economy. But you can cut income tax and cut company tax paid rates, scales, if you do that. Are there other tax breaks on superannuation, which is very generous at the moment? Negative gearing, all those sort of things are in the mix. I don't know. I haven't heard the latest rumour. I'll have to check the newspapers later. But there's rumours going on. Here we are 2 weeks from the budget. So I think the government's sort of working them out.
They test them out.
They test them out. They fly the flag. We've got a lot of negativity. We won't put that in the budget.
Yeah.
So, mate, at the end of the day, I'll take a step back. I would cut spending in real terms. So in real inflation adjustment terms, it's down. I would probably tweak some of the tax system to make it a little bit less generous in the areas where it's very generous. Then a Reserve Bank would hike interest rates. And I would change, this is the other thing which doesn't cost a lot of money, it's rules and regulations, red tape, compliance issues. They're trying it in the building industry.
Mate.
It's sort of like,
You should look at my industry, financial services.
Yeah.
It's out of control.
Yeah. So there's more people employed in compliance than there are in anything else. Yeah. Compliance costs are huge.
And the people per person is very expensive too.
Bloody expensive. And so I'd think of a way. Now, you don't have no regulations. You need everything to be regulated. But you just go hammer and tongs, flat out, to get that efficiency in your economy. Now, it's all very well for me to sit here and spout that off in 2.5 minutes. It's harder to do it in reality, but take a step in that direction.
Let's talk about GST.
Yeah.
Let's talk about that for a second. It's my favourite topic.
Yeah.
One of the things I believe in, because I got my eye on those people over 55 who have got no mortgage, have got money in deposit, got big healthy super funds, and they have a lot of equity in their homes. I got my eye on them. Like when I go to airports these days, it is full of people over 55 or going on holiday.
Yep.
When I go to restaurants, it's full of people over 55 going to a restaurant. It's spending money.
Yeah.
They buy the caravans, they buy the new BYD cars, electric cars. They're buying the apartment because like the investment property. They're outbidding all the younger people because they're confident, they feel rich, and I'm thinking, well, what would actually stop them from spending money? Well, I just know that people in that age group actually still read the newspapers, a lot of them. If the front page of the newspaper said recession, that those people got brought up in an environment.
Oh, they remember it.
They remember it.
Me, mate.
Yeah, we remember it. And they go, oh, shit, hang on, recession better. Let's pull up here a second. Yeah. 1, recession. 2, by the way, the GST is going up. So now when I go to do my shopping, it's 10% more.
Yeah.
And people, the whole environment of changing the behavior of a nation in terms of us spending too much, therefore encouraging vendors or merchants to feel as though they can charge us more, which is also their behavior, is all psychological. So I think, done a survey 1, survey 2, I think that if they were reading the papers constantly, which the newspapers will do these days, and the next thing you know, then as soon as the newspaper will appear everywhere, there's a recession on. There's a recession. So, and by the way, GST's been increased temporarily, just while during the recession, just during this period of getting inflation down.
Yeah.
They might say, you know what, darling, we're not going on that caravan trip around Australia. We're not going to buy the caravan. We'll wait.
Yeah.
And we
won't go on the cruise around the Pacific Islands.
Yeah, we'll pull up. And let's not do it. And I think that's what needs to happen. Sorry, Steve, could you just get just the one step though? But to get us there, recession, maybe reading a little bit about unemployment, and GST. That's the policy I'd like to see from a fiscal policy point of view. Do it hard and fast. So it happens
and unexpectedly. Scare the pants off people.
Basically. And that way because I'm hoping the outcome will be a shorter period of stress for everybody. Yeah. The last thing I want to see is this Reserve Bank try this experiment again and elongate the period that they put mortgage holders out.
What you've proposed, if I can go back to about 10 minutes ago when we were having our conversation of the rate monetary policy, both up and down with interest rates affecting a very small part of the Australian population. A GST hike affects everybody.
Yep, that's what I'm saying.
It is the rich person who buys a bottle of Grange for $1,000. They pay an extra $100.
Then they won't do it.
The little old lady who buys little old man who buys a cheap bottle of red for $10 only pays $1 on a 10% extra.
But if he's doing it every week, he's going to think about it.
But it impacts everybody. Unlike a mortgage, I don't have a mortgage. I don't care if they hike rates. Hike the GST, well, everybody buys groceries, insurance, the
shoes, T-shirts,
everything,
cars, and
food,
you know what?
Included on food. That was one mistake. It's not in hindsight maybe that Costello made. Like Keating made mistakes. They all make mistakes, and I'm not picking on him for that. Far from it. Was to exclude food.
I think it should be included. Everything should be included. So, and there's one more thing I want to say about that. If I increase the GST, I would only increase the GST for a period of time. So it's got a bottom of 10%, and it's got a top of 11% for argument's sake, whatever it is.
Whatever. Yep.
But it never goes below and never goes above a certain number. But you know what's interesting about that? If you are in that category of people who are happy to earn higher interest rates, or you've got no stress whatsoever, the money you don't spend, you are now saving. Now,
that's right.
Our savings environment starts to load up. In other words, which is very healthy. Then the banks have got more money to lend.